Government borrowing is the biggest issue in finance today.
Governments around the world are addicted to debt.
It's that the path is unsustainable, and ultimately the level of the debt will be.
So in 1974, the national debt was $2,150 per person. Now it's over $100,000 and you're paying for it.
The national debt stands currently at about $36.2 trillion.
I don't know about you, but how do you even begin to know how much money that is? I mean, as long as it's going to fixing roads or improving schools, well, it's not. It's going to the same people who want the debt to keep growing. In fact, it's gotten to a point where interest payments now exceed the entire military budget. And what's not talked about is that it's creating one of the biggest wealth transfers in US history. Before, it was at least manageable. The dollar was strong and confidence was high towards the US. But DC acted a bit too confident, and every administration since has kept the debt climbing up to the moon. But why? Because when there's profit to be made every time the US goes deeper into debt, all promises to lower it are just lies. And unless you understand how they profit from this crisis, you'll keep paying through inflation, interest, and savings that tank year after year. Because America's debt isn't a problem to solve, it's a business model.
The U.S. is on an unsustainable fiscal path. Debt is growing faster than the economy.
And if there's a significant inflation, the U.S. would lose their position with the dollar being the reserve currency of the world.
We're gonna be broke unless we get serious about dealing with our spending issues.
So to understand how America's debt could crash the economy, let me first show you how it all works right here on my desk. And in this demonstration, I'll be the US government. And once you see how this works, you'll understand why the US debt keeps growing and how this can all lead to a collapse. So again, I'll be the US government. And let's say to run the entire country this year, Social Security, Medicare, military, roads, I need exactly 10 coins. But I only collect 6 coins from taxes. So where do I get the other 4 coins from? From borrowing money that I don't have. This is called deficit spending, and the US does this every single year. And each year, the borrowed money gets added to this stack. Right now, this represents $36 trillion, the largest national debt in world history. That's obviously a big ass number, but here's what makes it worse. Because I'm not just paying back this borrowed money, right? I'm also paying interest on all of it. And that interest bill, that's $1.1 trillion in 2024 alone. That's more than our entire military budget. And every crisis, the pandemic, wars in 2008, has pushed this stack even higher. And so now the question becomes, who's getting this $1.1 trillion in interest? So about 30% goes to foreign countries like China and Japan that buy this debt as bonds. But the majority, and I'll get into this in the next chapter, is going to private interests right here at home. And what most people don't realize about this growing debt is that it's creating a secret wealth transfer that's also growing the inequality. But anyways, why is this debt allowed to keep growing? Well, actually, it's not supposed to. The government can't actually just borrow endlessly. Usually, Congress sets a limit called the debt ceiling. And once I hit this ceiling, I can't borrow a single dollar more, even if I need to pay bills that I already owe. It's like if you order a $100 dinner and then refuse to pay the check, not because you don't have a credit card, but because your sugar daddy blocked access to it. But what happens once these bills pile up? Well, this is where it really gets dangerous. Because if these bills don't get paid, this creates the risk of what's called a default. It's never happened yet, but it's only because Congress almost always waits until the very last minute to either raise the ceiling or suspend it altogether. In fact, they've done this over 100 times since World War II. But the thing is that anytime we've been close, it creates panic. Stock markets drop, government workers get furloughed, and in 2011, it led to America's credit rating getting downgraded for the first time ever.
The United States received a downgrade by one of the credit rating agencies.
So then if this is true, why does the debt keep growing, where it's now tripled over the last 20 years? Because for politicians, the debt ceiling isn't a crisis. It's political theater. Instead of solving it, they play a game of chicken, especially during election season. One side says, we won't raise the ceiling unless spending gets cut. The other says, we already agreed to spend, so just raise the ceiling. And it goes back and forth. And in fact, this guy explains it perfectly why even with all the back and forth, the same thing happens.
To be honest with you, the debt ceiling will continue to go up because increasing the debt ceiling is a bipartisan agenda unless any party wants a mutual destruction.
So I'll explain a bit who this random guy in a mask is, but he's absolutely right. Clinton added 1.5 trillion, Bush 6.1 trillion, Obama 8.6 trillion, Trump 7.8 trillion, Biden added $6 trillion, and even those who campaign on cutting it.
We're going to make so much money, we're going to pay off debt. The $35 trillion in debt, we're going to pay it off. We're going to get it done fast, too.
Still raise it once they're in power, like Trump in his second term right now. Why? Because raising taxes and cutting spending is unpopular. Voters like tax cuts and government programs. But the only reason why this happens in every administration is because people trust the US dollar. I'll get into what that means later, but think of it like we have this special credit card with absolutely no limit because everyone else believes that we'll pay the debt back someday. But like I mentioned, if one day we can't, it will trigger a default in a global crisis. So I will answer by the end of the video whether this will happen, but it's important you understand at least this for now. The system is broken by design, and the thing is, the foundations are starting to crack. And in the next segment, I'll show you exactly who profits from this mess and why fixing it might be the last thing that they want. But what if I told you that if Congress can print money for the insiders, don't you also deserve the tools that level the playing field? That's where today's sponsor, Moomoo, comes in. Moomoo is an all-in-one investment platform from idea generation to research and trading. Like, look at this feature. It's the Inside tab that literally gives you data on what kind of trades Nancy Pelosi is making. Most traders jump between different platforms from Yahoo Finance and Reddit to help make their decisions, but with the community tab of over 26 million users worldwide, I can find the next stock idea. For example, whether you love or hate AI, it's only going to grow. So one idea I got was investing in AMD that makes chips. I did my own research looking at the integrated Morningstar research and premium news sources, and I've been up 25% in a few months. And the best part is there's $0 commission fees on stocks, ETFs, and options. A lot of you ask me how you should stay ahead in a world that's rapidly changing. So I have an exclusive offer for you. If you sign up now and fund your account by September 25th, you can get up to $1,000 in NVIDIA shares in a limited time 8.1% APY cash sweep for US users. And it's important because as you'll see next, this is one way insiders are winning big. So let's get into it. Who exactly is profiting from this national debt? Well, there's three main players that make billions every time we borrow more. In fact, the first player is the very person that's behind the mask, Wall Street. I gotta first ask, why the mask?
You know, I have to interact with a lot of people from a lot of industries, so given my profession, I have to be careful, and I decided to just remain anonymous.
Fair enough. So I think we can get right into that. You've worked at top investment banks for around 6 years or so and now run a credit investment at a hedge fund. And you mentioned certain sectors that benefit the most. Does Wall Street fall under that?
It definitely does. Basically, investment banking and the investment bankers are the ones who broker all those deals. So they broker the M&As, they broker the IPOs, they broker the debt. So they take the fees for each of the deals, and when there's a lot of liquidity in the market, there are a lot more activities, which leads to a lot more bonus checks for the investment bankers.
Every year, the Treasury holds nearly 300 auctions to sell government bonds. And Wall Street buys up most of them. Because remember, buying these guarantees a slice of that $1 trillion in interest that gets paid out. For example, billionaire hedge fund manager Bill Ackman made millions betting on Treasury bonds in 2023. But here's the thing, you and I can buy these same bonds too. So the problem isn't that they're making money, it's what happens during a crisis. Because the real money isn't in holding bonds, it's in managing the money. I'm sure you've heard of everyone's favorite company, BlackRock, that manages $12.5 trillion in assets from Apple, Amazon's to even apartments and hotels. But about $3 trillion of their portfolio is in government bonds. And they charge tiny fees like 0.5% on every dollar that they manage. So $3 trillion of that is $15 billion in revenue. But the thing is, this doubles during a crisis. Like in 2020, the Federal Reserve hired BlackRock to run emergency bailout programs in markets BlackRock itself was already invested in. And they did the same thing in 2008, helping unwind toxic assets while buying up others on the cheap. That means that they profited on both sides, managing the crisis and getting higher to fix it. So that's the thing, there's a lot of money to be made in debt, but Wall Street isn't even the biggest winner. Because financial crises happens and they come and go, but these guys, they always win. In 2023, the Pentagon handed out $431 billion to defense contractors. Lockheed Martin alone got $61 billion. But with all that said, and to be fair, there are arguments to be made for military spending. You know, you worked on M&A deals with defense contractors, if I'm not mistaken. What does this tell you about how defense contractors and their influence when it comes to fiscal policy?
Military power gives a lot of advantages to the US. It gives geostrategic dominance, security guarantee, power to sanction non-ally countries. The government controls the fiscal policies, but is significantly impacted by its agenda on the dollar, which is backed by the US military. Now, if everybody believes in the dollar, what you can do is you can issue dollar infinitely and people will still buy the dollar. They can always fill that gap of that deficit by issuing more bonds. And all the new innovations which came out of the US, such as Tesla, Amazon, Netflix, Google, Meta, all undeniably benefited off the superpower of the dollar. So if the military power is removed from the US system will collapse in any minute.
And that's important to understand because it's what allows us to even hold this much debt in the first place. But the problem is, there's massive waste. The Department of Defense has failed their audit every single year. It's literally the only federal agency that's never passed one. But can you even blame them if they have absolutely no incentive to? Because even during these debt ceiling crises, when the government is supposedly broke, military spending never gets touched. In fact, in 2023, Congress actually increased military spending to $886 billion. So you have to ask why. What's the real reason this keeps happening? Well, it's because defense contractors spend over $100 million a year lobbying. They have 869 lobbyists, more than Congress has members. And guess what? 2/3 of them used to work at the Pentagon. And these lobby machines get paid a shit ton of money to indirectly help grow the debt. In fact, you see the same revolving door with Wall Street. How have you seen the influence of lobbying groups shape policy decisions in Washington?
When I was working in investment banking, whenever the deal involves a military contractor, the deal always gets done, which is quite rare considering a certain industry. One, the defense industry is so attractive to a lot of the buyers in the market. Case two could be, there could be certain buyers who are influenced by the government to purchase the defense contractors so that they could engage in certain activities with the government.
But this lobbying machine isn't just for Wall Street or the military. Like I talked about in my Boomers video, AARP blocks any cuts to Social Security or Medicare, which is the biggest contributor to debt. And there's even lobbying groups like Americans for Tax Reform that make politicians sign pledges promising never to raise taxes. But to be fair, I do agree with that one, considering it's more of a waste and spending problem than a tax problem. But anyways, that's the debt industrial complex and how the wealth transfers to the three biggest winners. But even with all that said, I don't know if it's just me or does this $36 trillion, and yes, even though it's a huge number, doesn't really mean shit for you and I watching, right? Like obviously the system can't continue forever, but what I found is that it's not for the reasons you think. Because what if I told you there's another debt crisis looming, one that's even more dangerous and directly impacts regular Americans like you and I watching? Because I swear I'm not trying to rage bait here, but there's a private debt bomb hiding that could trigger a domino effect that could impact the national debt and maybe crash the global economy. Let's start with you watching. Americans today owe a staggering $18 trillion in personal household debt. That means mortgages, student loans, car loans, and credit cards, which alone have hit $1.2 trillion. And what's scary about this is that unlike government debt with 5% interest rates, credit cards charge 20% or more. So meaning a family with $10,000 in credit card debt pays $2,000 a year just in interest. And when over half of Americans can't cover an unexpected $1,000 expense, if they lose a job, they could default almost immediately. It's why some lower income households are even turning to buy now, pay later options like Klarna and Affirm and stacking multiple of these loans just to pay for groceries. Just like I keep saying how this $36 trillion is just this arbitrary number, it's because what matters more is the context of the debt. And what I mean by that is that it matters who holds the debt. And to explain what I mean, you need to first understand that debt is either a leverage or a burden. You mentioned the breakdown between the asset versus the non-asset class. When household debt is so high, how about the impacts on the growing wealth inequality?
Leverage can be used in two ways. One is there's the healthy leverage, which the rich people use. They only use leverage to maximize their returns. And they know that they can pay it back after a certain amount of years. So basically, they're only using the loan to maximize their returns. So that's the good loan.
Just to stop for a sec, because this is key, and look, this is probably a whole topic in and of itself, but this is exactly what Elon Musk does to avoid taxes. Instead of taking a salary from his companies that the IRS can tax, Musk asks for stock options that can't be taxed until he's ready to sell. Elon then goes to a bank, uses those stocks as collateral, and takes a loan out of, let's say, $100 million. Then he uses that $100 million as spending money for his houses, cars, vacations, his multiple wives, or even buying a company like X. And since it's debt, not income, it's not taxable income to the government. In short, the asset class benefits a lot from debt. Okay, let's continue.
Now, the bad loan are the loans which the less rich people use because they really need the money. So those kind of loans are the ones which would get drastically be impacted because of the high interest rate. And because those people are the ones who are first to not pay their loan back, the banks would get worried and they would pressure the people to pay their loan back faster than the people would need to pay it back. So basically, the people in the lower class would get impacted further, and the wealth inequality the gap is bound to get even worse.
So the reality for most Americans is that missing just one paycheck can lead to a default on their debt. But what if these very jobs that they rely on to pay for these things are also at risk? Like I talked about in my Private Equity Will Break America video, what's worrying is that corporate America owes a record high $21.5 trillion, with $300 billion of that debt due by the end of this year. It's why there are 2,000 US companies that are now zombies, where they can't even cover the interest payments. Companies like Bed Bath & Beyond, Joan Fabrics, you guys roasted me in the comments for that, have already collapsed, and 100 more are barely hanging on. But how bad is the situation really?
How much of the private sector debt are non-performing? We call it the non-performing loans, which is short for NPLs. In 2008, it was at around 5% and went up as high as 7%. But what we need to monitor is that the NPL level has been increasing from around 1.1% in 2020, and it has increased to about 1.7% today. Now, that 60 basis point increase may not seem like a big jump, but from absolute terms, it's actually a pretty huge amount considering how much private sector debt there is in the market today. NPLs generally tend to go up when the interest rate is higher because there are a lot more people who would default on their loans than when the interest rate is low. I think a crisis because of a private sector loan is not immediate, but this is something that we have to monitor.
So here's what's clear. This isn't three separate debt problems. This is overly simplistic, but when households can't pay their debts, they cut spending, and when companies default, banks take losses and new lending dries up, and when investors panic, they buy government bonds, interest rates drop, but heavy new borrowing soon makes them rise again, and cheap loans and bailouts push families and companies to borrow even more again, and each crisis leaves the government with even more debt. But the real question isn't whether this is unfair. It's whether this house of cards will eventually collapse. Because here's the thing, most debt bubbles in history has eventually popped. So the most important question this whole time isn't if or when, it's what you can actually do about it. So with that, I have good news and bad news. What would you like for me to start with? Okay, fine. I'll start with the shit. God, that was corny. But anyways, because things are about to change fast. You said that we're entering a new phase of capitalism. What do you mean by that?
I define the phases of capitalism into a few phases. The first phase was beyond 1920s, post the Great Depression era, and beyond 1940s, post the World War II, beyond 1990s after the internet, beyond 2008, post the global financial crisis and smartphones, and beyond 2020 post-COVID. Now, beyond 2022, after the inflation, the capitalism we live in today, in my mind, is a new phase because, number one, there are limited new innovations which will drive meaningful growth. So we have to rely on fiscal and monetary stimulus to sustain the growth. But number two, inflation has become an enemy of our system, which means that monetary policies are not going to come to save us anytime soon. But number three, because the US needs to refinance the debt and manage its fiscal system, they will most likely lower the interest rate somehow. So if you couple that all together, it's a world where we have no growth, but there's inflation always looking over us, which is basically a stagflationary environment, and potentially a low interest rate environment, which is a very weird system. Now, this basically means that we need to embrace inflation to sustain the system. Now, if you do that, two things can happen. It's either make or break. But the make is not a healthy economic growth, but it's a real situation where asset prices continue to go up while there's no growth.
So that seems quite dark, if anything. It seems like two opposing situations where even the positive seems like it's all kind of being held up by something artificial. What do you think will happen in the next few years?
I think the system has been held up by the artificial system for almost a decade now. The first thing that'll happen is I think the inflation will continue to linger in the market. Now, even if inflation goes away, it may come back anytime soon unless a severe recession happens in the US. And number two, I think interest rate will most likely be pushed down or forced down by the US to meet their political agenda. Now, the US doesn't want a massive inflation because it'll weaken the power of the dollar. And if there's a significant inflation, the US would lose their position with the dollar being the reserve currency of the world. So to answer the question, I don't believe there's an end game to this. Basically, I think US is somehow going to continue to roll over and issue new debt. And I think they'll leverage domestic institutions to the max. And also, I believe they'll leverage the tariff schemes to threaten the foreign nations to absorb the US treasuries. And if everything goes right, the US will be the only country which can absorb the inflation and continue to grow. If anything goes wrong, the US may suffer from the inflation with limited consumption power. And in that case, the US will need to give in to other nations and share the pie to survive.
So I guess to summarize, the next few years seems like it's going to be a pretty critical point on whether we're able to maintain that number one position that we've had for the last few decades.
Correct.
Over the next 10 years, the US is predicted to borrow another $20 trillion, bringing the total debt to nearly $50 trillion. But then who's going to buy all this debt? China and Japan used to be our biggest lenders, but they've been quietly selling off their holdings. And since 2023, the big three credit agencies has downgraded US debt from AAA to AA+. So what happens if we run out of buyers? Interest rates will have to spike way up to incentivize. And remember, every 1% increase in rates adds $360 billion to our annual interest bill. Those zombie companies that we talked about, they can't refinance anymore and they go bankrupt and people lose jobs. And the people who lose jobs won't be able to pay back their household debt like credit cards. Now, like I've said, I'm not trying to rage bait because I don't think all this will happen. But if we do default and the economy crashes, this time the government can't afford to bail anyone out because they're broke too. So again, it's not likely, but let's get into the good news. Well, kind of. I want to at least leave you with some sort of hope instead of you being sad and everything is cooked. You've said multiple times in your videos that building inner strength is more important than money because social systems can change. What do you mean by that? And also, if this debt crisis triggers a major systemic change, what should people be preparing for?
So the reason I keep emphasizing the inner strength is because the current world is changing very fast. And when I say changing very fast, I'm not talking about AI, electric vehicles, but what I'm talking about is the way how the system is run. And doing something really well helps you in living this world. For example, if you're good at math, that's good, but being good at math doesn't prep you to be prepared for all the changes which is happening and which will happen in the future. I think building your inner strength, which allows you to adapt to different changes which happens in the system, is the most important thing to possess.
Couldn't agree more. Adapt or die, right? What are some like these tangible examples where ordinary people can position themselves for what's coming?
While the job market is tough, I think people should look for the best job they can. I define it as the one which pays us the most, and number two, which we can learn the most. So by finding such a job, I believe that the inner strength, which I just explained, is something which will come to you if you work for a fair amount of time. And I think that will equip you with the right mindset to survive the current world. And while you're doing that, I think you definitely need to leverage your income to invest. But basically what we need to do is that we need to be nimble in terms of picking which financial instruments we need to invest, depending on how the Federal Reserve and the government is taking their stances in terms of managing the country. And lastly, this is a bit of a controversial statement. I tell people to be not afraid to go all in. I think the thesis of diversification is not working anymore. And when the right opportunity comes, they need to invest, but in a way that could maximize their returns.
What are you going all in on?
Well, at this point of life, I'm not really going all in on anything. This is basically an advice for the people who are kind of just getting started and who's trying to build a wealth to a certain extent where the world allows them to diversify into different assets. But before you get there, I believe the strategy works.
So it really does seem like you can't afford to be average anymore. You have to either join that asset class or you're kind of fucked.
That's kind of what people have to target. Otherwise, it's a tough world to live in, and I think everybody's feeling the same way.
So all this debt doesn't mean anything unless you understand one thing. That depending on if you're in the asset or the non-asset class, debt can be leverage that make you richer, or debt can be a burden that will bury you. So the choice is, which side will you be on? Look, I don't know about you, but I want to be on the right side. So I will be going even deeper into how you can position yourself if the debt bubble pops. And this will be available next week on our free email newsletter in the video description. But if you're curious on how private equity is contributing to the growing corporate debt, go and watch our video on how private equity broke America to learn how money and power work.